Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. It's a Tuesday morning. It's an all-boys show today. Surabhi is out of action for today. That is, Mangalam is with us. And, of course, my colleague Nigel Guys. Hi, morning.
Hi, morning.
Morning. It's the weekly options expiry. We've done well over the last few trading sessions. And we also have Nigel, who's the senior editor at CNBC-TV18. Nigel, congratulations, man.
Thank you so much.
It's an honor and a lot of pleasure working with you alongside, multiple shows that we've done, a lot of interviews, etc. You deserve it.
Well, thanks a lot, Mangalam. Feels good to be here. It's been thanks for being part of the journey and the process. 15 years is a long time, and I've thoroughly enjoyed myself here in the CNBC TV18 studio. So thank you, everyone, for your support.
Onwards and upwards.
Thank you so much.
Onwards and upwards, always.
All right. Well, let's just take it from the top then in terms of where we stand with regards to the price action, right? Another record high, basically, is what you had. S&P, NASDAQ, Russell 2000, all indices really, powering up. I mean, it's kind of felt very squeezy, if I can put it that way, because if you just look at the last 3-4 sessions, sharp moves higher, very, very, actually, it's not narrow. It used to be narrow, just about 5-7 stocks, but, it's the tech names, the AI names which are doing well. It's the, a lot of the so-called meme stocks are doing very well. It's kind of feels like a repeat deja vu of, back in 2021, right? Of course, you didn't have that big AI-led theme, which is the big driver of what we're seeing out there. But it's very specific segments, and it's mostly all sort of converging around tech and AI, one way or the other. The big story from last night, of course, is the AMD stock jumping 24%, was up 30% at one point. They've unveiled a massive computing deal with OpenAI. And OpenAI, by the way, is going to buy chips to set up infrastructure worth about some 6 gigawatts or so. And it's kind of the first direct challenge to the industry dominance of NVIDIA. So far, it was all about NVIDIA's GPUs powering this entire AI infrastructure build-out. And now you've got OpenAI, which is, of course, spending the most amount of money in this, AI supercycle, tying up with another company, which is AMD. All right. Well, Tesla was the other one, 5.5% last night. Social media postings by Tesla hinting at a possible product unveiling. Maybe later today, we'll find out. But stock was up sharply. On macro markets, not very much. 10-year yield about 4 basis points higher. Oil prices about 1.5, back at about 65.5, 60. Just above 65.5 or so is where we kind of left off at. So that's the global backdrop, the global setup as we begin this particular session, which is positive, which is, of course, been almost unchanged for the last couple of days. It's tech and AI one way or the other. Now I'll come to an important event here in Mumbai. The Global FinTech Fest kicks off in Mumbai. It starts today. We, of course, will get you extensive coverage, lots of interviews from there. And, of course, it's a 3-day event, and Prime Minister Modi is going to be here in Bombay day after tomorrow on the 9th, and he'll be speaking at the Global FinTech Fest. I mean, it's kind of become a marquee event. Lots of global participants also come down for this. And it's an extensive lineup, and our colleague Ritu will be reporting from there, conducting many of the interviews, and we'll give you a sense of what's lined up from there. Markets here have been doing a little better. There was a rally yesterday as well, started last Wednesday. Thursday was a holiday, and then, of course, continued on Friday and picked up yesterday. And we've crossed now on the Nifty the 50% retracement of the prior fall. The next major resistance is the 61.8% retracement of the fall, the full fall, which is 25,120. And the support stands at 24,884. So that's the next sort of stop as far as the Nifty is concerned. You're basically back at the upper end of that range, which we were not able to take out the last time around. Bank Nifty gave a bullish crossover yesterday. That's closed above the 61.8% retracement of the entire fall. It's looked better for the Nifty Bank as compared to the Nifty. The next upside level is 56,528. Supports come in at the 20 hourly and 40 hourly exponential average, 55,624, and then 55,380 are those two numbers, those two levels. Gift Nifty will give you a quick sense of how we likely to start. We'll pick it up from there. 4.5 point change. So quiet start, but can we build up from where we left off yesterday is the question. How's the F&O sort of setup looking like? Nigel is here with exactly that. Nigel, over to you.
Well, Prashant, this quiet start may not be so bad, right? But I'll tell you what, it's weekly expiry that will play out, so the end may not be so quiet. We could see some kind of volatility picking up towards the end of trade. And the good part is, on a day-to-day basis, we've been making higher highs, and that's why, in fact, the bulls will be feeling good. But one positive is the FI is selling, right? It's come down from around 3,000 crores, or it came down to around 1,500 crores, and now it's come down to around 300 crores. Are we on the verge of them turning, the corner? Can we see FI net buy numbers? Just looking at the pattern, that could be a strong hope, going by the kind of reduction we have seen in their selling. So that's an important cue. Besides that, for the Nifty on the whole, well, we did see a good bounce, but the Nifty Bank, that's actually taken leadership yet again. And in yesterday's trading session, there was a bit of a short covering bounce that did play out because the Nifty Bank was bursting away and the open interest was down close to 3.5%. But the FIs, they've reduced selling in the cash market. However, the big short covering is yet to take place because in the last few trading sessions, the Nifty is up close to around 400 points approximately. But you have seen that they continue to add some short positioning. And now the short positioning is reaching that 1.98 lakh contracts. In percentage terms, we're at extreme levels at around 93%. So if you can build on the momentum, these shorts are going to get squeezed out. Even in percentage terms, actually, that number should come up for you on the screen. One heartening aspect, though, from the FI positioning is that they have continued writing puts. For the last 3 trading sessions, we have consistently seen that the number of puts that have been written are more than the number of calls. And that's why the PCR now has moved up. Remember, it had moved down to that bottomed out levels just last week at around 0.63. Now we're at around 1.33. So it's gradually moving towards the upper end, which is at around 1.6 or thereabouts. Remember, these contracts expire today. So tomorrow the PCL will readjust itself. And the reason that the PCR has moved up is because put writing, massive put writing is what we are seeing. 24,950 put, 25,000 put. Between them, massive amount of open risk build-up is what we have seen. So let's get straight to the levels. Now, the Nifty has been making higher highs, as I mentioned earlier, but you'll want it to make a higher low. So in that case, you have a reference point coming out here. This is yesterday's low. So the 24,880 mark, that's your first level of support. On the upside, the 61.8% retracement is at around the 25,120 odd mark. And we had some call action yesterday at around the 25,200 mark. So that's the important resistance zone that you're looking at. The Nifty Bank has been in a world of its own. But on the downside, that 55,700 mark, you'll want that to get defended because of 2 factors. It's yesterday's low, it's the 100 DMA. That's been leading the way. It will have to continue to do so. So FI net selling reducing, and now that short covering bounce is still due, the bulls will be fancying their chances to drive up higher from here on.
All right, Nigel, thanks a lot for that. So those are a bunch of levels that we have to watch out for on the Nifty as well as the Nifty Bank. Importantly, what you've got to do is also watch out for a couple of these consumer discretionary names. I've been looking at a lot of these second quarter updates that have come in. Nykaa did well yesterday, ended at the high point of trade. We saw some traction in a lot of these travel and tourism names as well. Case in point, La Travenews Tech or Yatra Online. And because it is festive season, because e-commerce is doing extremely well, we've seen early trends of that come by in the Amazon sale as well as the Flipkart sale. All of that tells you that delivery has moved higher as well. That stock went about 6% in yesterday's trading session. What's not doing well are some of these consumer staples. So to that extent, Dabur as well as Godrej Consumer second quarter update would be extremely crucial to track. But back to the global markets, the Asian markets, we have the Japanese index hitting a fresh record high this morning once again and continues to do so. We have Cameron Brandt, who's the director of research at EPFR Global, joining in. Good morning, Cameron, for joining in. Thank you for joining in. What do you make of the world right now? Do you think the US shutdown ends in the very near future? Because while it does not have a fundamental impact, but, bond prices are getting impacted by that. Does that, end anytime soon? And if yes, then what's the likely change here?
Well, I would say the first off that certainly from a fund flow perspective, I had to look at what happened during the past 3 shutdowns frankly, after the first one, which did have an impact on flows and yields, people have tended to shrug them off. So the past two have seen inflows to U.S. bond funds during the period, and no meaningful change, certainly in the 10-year Treasury yield. So honestly, I'm not seeing a lot of attention, of meaningful attention being paid to it at the moment. It's a little bit of background noise. If it keeps sort of carrying on into later this month and even into November, then it could start to have an impact. But I think, at least for the moment, it's not something that people are actually, or certainly the money managers, are not getting extremely upset about.
Hi, Cameron. Good to see you, Ben. Though, if you could give us a couple of data points, though. The FI selling, in the Indian markets, well, it had moved to very elevated levels somewhere towards the end of September. But that seems to have cooled off a little bit. How are you seeing the flows into India and to other emerging markets? If you would give us, a bit of a comparison on that front.
Right. What we've been seeing, certainly in the emerging Asian context, is not so much people turning off India, but getting so much more excited about other major markets that, India has sort of been almost an afterthought. There's definitely been some rotation away to other markets that weren't seeing as much money beforehand. The two main ones, in the case of China, there's almost been a capitulation after several months of resisting the performance we've been seeing in Chinese equity markets. We're starting to see money chase that outperformance. And then a lot of money recently has been heading towards Korea, which offers for investors an enticing combination of gearing to the AI story, but also a bit of a reform story too.
Cameron, a good conversation as always, shorter than usual. Appreciate you joining us and running us through, your take on where we are at. We'll take a quick commercial break here. We're going to tell you quickly what's lined up here on the program. Before that, 8:30, you will have the management of LG Electronics to talk about their very large IPO, which opens the subscription today. So those are the guests who you will hear from in a bit. 9 o'clock, we'll have Naveen Trivedi of Motilal Oswal Financial Services. We'll talk about consumer sector and focus. 9:20, Vinay Samre of DSP Mutual Fund will be a market master today. We talk stocks, markets. BKG Foods and Parle products join us at 9:30 to talk about the consumption trends as they are emerging after the GST cuts. 9:45, the management of IKS Solutions joins us to talk about their business outlook for the upcoming quarters. Nithya Balasubramaniam, the CFO of the company, will be with us. Towards the end of the program, Lata in conversation with Sridhar Sivaram of Enam Holdings to talk about the rise of gold as one of the best asset classes over a very long period now. This year, of course, turning out to be exceptional for gold prices.
Time to slip into a quick break, but we've got a lot of stock-specific action traffic today. We get to that in just a bit in our special Top 10 segment. I run you through the list, though. Reliance Industries, LTI Mindtree, Bank of India, Metropolis, Brigade Enterprises, Astral, Aditya Birla Lifestyle Brands, Eternal, and Optimus Infracom. All of them will be reacting to positive news flow, while Bharti Airtel will be reacting to negative news flow. Take that break, come back, we get into further detail on all of these names.
Welcome back. You're watching us here on Bazaar Morning Call. This morning, the GIFT Nifty indicating a flattish start for our market. Not particularly bad because yesterday as well, we started slow and thereafter towards the end, there was a big flourish. Though from, the lower levels, we've moved higher. At one point, the GIFT Nifty was indicating a cut width of 25 points. And now it's inched slightly higher to about 11 odd points. But it's all boiling down to individual stocks. And for that, our research team standing by with the CNBC-TV18 list of top stocks for the day. Let's start with Sudarshan. Sudarshan, Bharti Airtel and Reliance Industries. A lot of data on telecom.
So TRAI has released subscriber data for the month of August, and total wireless mobile subscriber addition was of 35 lakh. That's an increase of around 0.3% if you compare from the month of July. And with this, total wireless mobile tele density has risen to almost 82.3%. Which company is seeing the maximum addition? That remains Reliance Jio. And also with an addition, it's also been gaining market share from both companies, Vodafone Idea as well as Bharti Airtel. So in the month of August, its market share stands at 41.08%, and that's an increase of almost 16 basis points if you compare from the month of May. That's basically in the last 3 months. Also, it has added more than 19 lakh users in the month of August versus just 4.82 lakh additions that company had seen in the month of July. But as far as Bharti Airtel is concerned, it continues to see an increase in the subscribers, but the pace of addition remains very low. In the month of August, it has added 4.64 lakh users against 4.96 lakh users versus 4.6 lakh users in July, and against more than 7.6 lakh users that company had seen in the month of June. As far as market share is concerned, again, it has come down to 33.59% in the month of August versus 33.65% in the month of July. That's the reason I'm going with mild red for Bharti Airtel and green for Reliance Industries.
Got it. All right. Thanks a lot for that, Sudarshan. Well, let's go across to Hormuz. He's tracking LTI Mindtree. Morning, Hormuz.
Morning, Nigel. And second major deal announcement that LTI Mindtree has done in the last few months. Now, this one that they have announced is a multi-year agreement with a leading global media and entertainment company. And of course, they have not named the company with which they have signed the deal, but they have said that this is the largest strategic deal that the company has signed till date. Now, according to a report from Reuters, where they are citing sources that this deal is likely to be valued at around $580 million. And this is much higher than the $450 million deal that they had announced in the month of May with a US agri giant. So another major deal announcement coming in from LTI Mindtree. The stock had moved higher yesterday, 3% in line with the other IT peers. It snapped a 3-day losing streak. So expect a green start to LTI Mindtree on the back of this deal announcement today.
Okay, Hormuz, thanks very much for that. Now, more stocks with news flow. Ria is here with those. Ria, good morning.
Well, good morning. Let's start off with Bank of India. The company has come out with its Q2 update. Loan growth this time around has been seen higher than the company's guidance of 12 to 13%. Deposit growth has also come in at 10.1%, in line with the company's guidance of 10 to 11%. So this stock expected to open in the green. Metropolis Health has also come out with its Q2 business update. 23% consolidated revenue growth seen this time around on a year-on-year basis. And this has been led by strong performance in preventive health checks as well as wellness offerings. And this is despite a lower incidence of seasonal illnesses this time around. The core diagnostics business has also improved to a high single-digit margin in Q2 of FY26 compared to a break-even level at the end of Q4 of FY25. And EBITDA margins also have largely remained strong at the consolidated level. Moving on to Brigade Enterprises, the company has signed a JDA for a premium residential project development in West Chennai. This is a 6.6-acre land parcel, and the estimated GDV for the project is about 1,000 crores. The last stock that we're keeping an eye out on is Astral Limited. The Kanpur plant of the company has started commercial production today for the manufacturing of pipes and water tanks. The total capacity for this plant will be 60,000 metric tons, and the plant is expected to be fully operational before the end of the year.
All right, thanks a lot for that, Ria. With that, let's go across to Vivek. A bunch of roundups coming in on the block deals. Vivek.
Well, that's right. Good morning. So, Aditya Birla Lifestyle Brands, earlier we told you about how Flipkart was looking to exit its entire stake. So yesterday, this particular deal happened in the block deal window, indicating that the demand was quite strong. And the list of buyers too, quite a few marquee names. Mazda Holdings picking up over 70 lakh shares. ICICI Pru Fund in various schemes picked up over almost 1.5 crore shares. Nippon India Mutual Fund picked up 1.32 crore shares. SBI Life bought almost 1.5 crore shares. And Aditya Birla Sun Life Mutual Fund picked up close to 15 lakh shares. So the block was well subscribed. Eternal, that stock took block deal yesterday. BofA Securities bought close to 1.9 crore shares, while Goldman Sachs sold the same amount of shares. And lastly, Optimus Infracom, again, yesterday was a sharp mover. BofA Securities picked up close to 3.5 lakh shares, while Diamond Asia Multi-Strategy Investment sold close to 3.5 lakh shares. So again, most of these names are reasonably well bid, and not overhang, especially when it comes to Aditya Birla Lifestyle, has now gone away.
point, and that's why the stock was buzzing in yesterday's trading session post that large trade as well. Thanks a lot, Vivek, and the entire team for that. In case you missed all the top stocks which our team is watching out for today, here's a quick recap. Stocks with positive news flow. We have Reliance Industries, LTI Mindtree, Bank of India, Metropolis Healthcare, Brigade Enterprises, Astral, Aditya Birla Lifestyle, and Eternal, along with Optimus Infra. On the other hand, we have Bharti Airtel, which is the only stock on our radar which is likely to open in the red on account of the subscriber data. Take a short break. On the other side, we have the management of LG Electronics India to discuss their 11,600 crore rupees IPO, which opens for subscription today. Sanjay Chitkara and Atul Khanna join in. Stay with us.
Welcome back. You're tuned in to Bazaar Morning Call. Well, we have got you all the top stocks read to track, but Sudarshan's done a lot of reading this morning. He's gone through a whole host of brokerage notes. Morning, Sud. Fill us in with what's on your radar.
Good morning, Nigel. So I have three stocks today. We'll start with Indigo. Investec has come out with a note and it has maintained sell call with a target of rupees 4,050 per share, and that implies a downside of almost 30% from current levels. It says it expects another weak quarter, that is Q2, and profit before loss. It believes that company may report of rupees 1,000 crore, and it's because of slower capacity growth that company has been seeing. Also, H1 EPS estimate is rupees 28 per share, and Investec believes that company needs to deliver rupees 193 per share of EPS in H2 to meet estimate of FY26. And despite 20% YY decline in EPS in Q1, company has seen very minimal cut in consensus estimate. So it sees sharper downward revision EPS post Q2, and also with index inclusion catalyst now is behind, it expects stock to realign with earnings fundamentals. Now next stock is Jubilant Foodwork. Yesterday company had released quarterly update in which like for India business had come at 9.1%, while company has reported a growth, but it's been lower than the earlier basically run rate of previous few quarters. Now GS, it has maintained neutral call and target rupees 650 per share. It says LFL may taper sharply in Q3 as high base kicks in. Also valuation leaves very little room for the upside. Macquarie too maintains underperform and target is rupees 530. It is concerned about moderation LFL growth in India business, and also even Macquarie says that from Q3 high base will kick in and higher discounts also will weigh on EBITDA and the margin. Last one is delivery. Over the weekend, company had released the festive season data. It was very strong, and Macquarie has maintained outperform call with a target of rupees 540 per share. It says company has handled 104 million shipments in September, that is indicating very strong growth. And peak daily volume had hit 6.2 million, well above 2.4 to 2.5 million per day that company had earlier forecast. Also, monthly run rate has risen from around 70 million in Q1 FY26 to 104 million in September, and market share is likely to have increased to 45% from 35% that company had seen in the previous few quarters.
Take that point, Sudarshan, entirely on delivery, and the stock was up 6% in yesterday's trading session, accounting for all those updates as well. But speaking about a lot of the big movers yesterday, we did have a bunch of them which, saw huge volumes while moving as well in either direction. Hormaz joins in with that list. Hormaz.
Morning, Mangalam. And yes, the broader markets were seeing some very huge moves on either direction on very strong volumes. So we start off with the hospital names yesterday. They were the ones that were buzzing around, being the sector of yesterday's trading session. You start off with stocks like Fortis, Max Healthcare, Yatharth Hospitals. You take a look at the volumes there as well. Over 1 crore shares traded on Fortis. Max Healthcare, the newest nifty entrant, almost 1 crore shares traded there as well. Yatharth also seeing volumes that were almost 3x of their 20-day average. So very strong volumes, and even on the delivery front, Fortis had nearly 3x of their 20-day average. Max Healthcare, well, nearly almost about in line, and Yatharth too seeing delivery volumes that were almost double of their 20-day average. We spoke about KIOCL yesterday. The stock moved another 20% in yesterday's session as well. So in the last 3 sessions, the stock is up almost almost 50%, and almost the volumes on Monday were double that of Friday's trading session, when we had more than 2.6 crore shares that changed hands on KIOCL. The 20-day average is just over 16 lakhs, and although despite that, Monday's delivery volumes were lower in comparison to Friday. Now 16.5 lakh shares were marked for delivery compared to a 20-day average of 3 lakhs, and Monday's turnover for KIOCL was 5x of its free float market cap, and that's also because there is no free float in the market whatsoever, because the government has 99% stake in that company, and as a result of which the stock added nearly 6,000 crore to its market cap yesterday. The other one, of course, is Repro India. The stock is now up almost 15% in the last 3 sessions. The Monday's volumes were the total of almost the last 33 sessions put together. We had close to 3 lakh shares changing hands. The 20-day average here is only 10,000 shares, and 51,000 shares out of those were marked for delivery. The 20-day average here is just over 8,000 shares. So it did cross its 100-day moving average intraday, but has cooled off from those levels. So we'll keep an eye out on that 100-day moving average for Repro India at 514.
Right, Harmas, thanks very much for that. So that's a fairly detailed set of stocks, big movers, and of course what lay behind just the sheer price action that we had yesterday. We take a quick commercial break here. On the other side, we'll connect with the management of LG Electronics, and we talk about their 11,600 crore IPO, which opens for subscription today. Stay tuned, coming up. Okay, well, the IPOs are coming in thick and fast. Welcome back. You're with us here on Bazaar Morning Call. Now, India's second largest appliance maker, LG Electronics' 11,600 plus crore IPO opens the subscription today. This will be the third largest Indian IPO of 2025. We're joined by Sanjay Chitkara, Chief Sales Officer, and Atul Khanna, Chief Accounts Officer at LG Electronics India. Gentlemen, good morning. Great to have both of you here. Thank you very much for joining us. I want to just start by asking you a basic question. This is 100% offer for sale, right? So with no fresh money coming into the company, how should viewers who are watching you this morning look at this exercise? It's a large issuance, but no money into the company. What is the value creation for them? How will this change how business is run and what you're able to do at LG Electronics India? If either of you want to take that. Sanjay, if you want to take it.
Yeah, so see, LG is a market leader and we hold highest market share in almost all product categories. And we are a very diversified company. This IPO is just not a financial event for us. It's a future-ready journey for us, where we will start many activities, like we are coming up with our third manufacturing facility in Shri City. At that manufacturing facility, if I talk about size-wise, it would be 3 times as big as of one of our factory.
No, and Sanjay will come to all of Pune. Sanjay will come to that. Sanjay will come to that. I completely agree. There are lots of IPOs which are complete OFSs, and we'll come to that Shri City facility, and we'll ask you about that in terms of what the payback, etc., is going to be for that investment. My question, though, is, just the transaction. This is a listing, but there's nothing coming into the company. All of this, of course, could have been done in any case as an unlisted entity. So that's my question.
See, it is not the first time that any multinational company is doing their IPO in India.
Yeah.
So, I mean, whenever any multinational company does their IPO, of course, the parent unlocks certain value. But let me remind you, we came in India 28 years ago. And that was the time where very few global players could able to recognize long-term growth potential of India. And right from that time, we have kept on investing in our manufacturing facilities, innovations, introducing a lot of innovative products to our consumers,
Right.
expanding the retail infrastructure in India, distribution reach. So I mean, that's the current valuation is a result of hard work of last 28 years, which LG has been doing.
All right, we take that
And
point.
on top of it, the trust of our...
Right, we take that point. You know, there will be unlock of value for the parent. I mean, just for perspective, the LG overseas business actually trades at around 16 times, whereas the IPO has been offered at around 35 times. Though, if you compare it to the other listed peers in India, there would appear to be a bit of a discount as well. Mr. Chatkara, Atul, you know, the question now either of you all can answer. What is the kind of growth that you're foreseeing for your businesses over the next few years? What are the drivers that you have out here? And you're looking to increase your sourcing from, India as well. So how will that affect your margins going forward? You had given us a peak inkling into the margins being nearly mid-single digits or mid-teens over the next couple of years. If you could give us some more on the revenue and margin drivers from here on.
So I will discuss about growth element and Atul will take a margin. See, India is a highly under-penetrated country for our products. If I talk about microwave oven, just 4% households have microwave oven. The product category like air conditioners, just 12-13% people household have this air conditioners. And if we compare to other developed and major economies like USA or China, they are already sitting at 80-90% penetration. So we believe demand will come, and we are sitting on a tip of iceberg of that massive and explosive growth in India. A Red Seer report tells that current TAM is 41 billion and it's going with 14% CAGR growth. Definitely LG will be the biggest beneficiary of this penetration increase, the premiumization, urbanization, and we will try to grow more than this 14% growth. To capitalize this, as I have already mentioned, we are coming up with our third manufacturing facility. Also, being a most premium brand, we will, to accelerate our growth, we will improve the access of our premium product to larger audience. For this, we are working hard on improving the affordability of the premium products. Side by side, we are also working on to scaling up our B2B business, which is based on two strong pillars. One is the HVAC and second is the information display panels. Apart from this, we are also focusing on service business, which is coming through annual maintenance contract. And we are also expanding our export. Currently, our export is to 45 nations, and we grew by 45% over last year. And we will create a momentum in our export journey going forward.
All right. Hi, Sanjay, as well as Atul. Welcome to the show. Welcome to the stock markets. And we look forward to chatting up with you in the next many quarters as well. Being a customer of y'all, but now, in fact, we'll have a lot of professional discussions as well with regard to the trajectory going ahead. Give us a few numbers, though. One, on the exports front, since you all said that could be a focus area. Currently, what is the exports contribution? And the next few years, where do you see that headed? Point number one. And point number two is OFS, okay, the markets will digest that for now. But the fear is always with regard to royalty. I believe it is a little sub 2% right now. What's the probability of that number moving up, say in the near future, a year, 2 years, or will it hold at current levels? Please go ahead.
So export I will explain. Currently, our export is 6% of our revenue and amounting to $160 million US. And I have mentioned last year over previous year, we grew by 45%. But recently, see, our export was mainly to Middle East, Southeast Asia and African countries. And this export was limiting to the mid-zone products, mainly the refrigerator, washing machine and compressor. But in year 2023, we started manufacturing premium products also, like side-by-side refrigerator and bullet TV. And now this premium product production will open the door of exporting to other developed nations, because there the usage pattern of products are similar, is a bit different than what we are selling in India. Apart from this, our export will be complemented by our robust domestic demand also. and it will reduce the fixed cost burden on our pressure on our production. And our export is marginally profitable business as compared to our domestic sale. Regarding royalty, yeah, Atul will share.
So, as you rightly mentioned, that our royalty expense is in the range of less than 2%, and we are getting a support from our parent company in terms of developing all technological products basis our Indian consumer insights, as well as they do a lot of investments on R&D for appliances and electronics business. So, we are not forcing any such change in the royalty going forward in a couple of years. And we are all getting all model lineups, technological and manufacturing core capability support from our parent company, for which we are paying the royalty. And we are not forcing any such going forward any change. As we have all just settled down our transfer pricing tax adjustments with our government, with the Indian government as well as Korea government. So we are not forcing any such change.
All right, so we take that on board, Atul, that royalty numbers unlikely to go up at least in the next around 2 years. Shareholders will be happy to hear that. Sanjay, I want to just probe you a little bit. From 6%, where does exports go to, since it's a marginally profitable business, and you gave us a good amount of rationale on that. And also in the last few years, the margins have steadily moved up. From the high single digits, it's moved to the early teens. The trajectory of margins improves from here, if you could help us out with that. And what are the levers in place? I believe, B2B is one area of focus. Services as well could move up. So give us the levers in place.
So, see, our idea is the previous year growth. We will keep on riding on that growth. And our idea is by financial year 2029, it should contribute roughly in double digit in our overall portfolio, this export. And talking about margin, see, margin is a combination of many things. One is the growth in your business. Second is how optimized is your product portfolio. LG Electronics is being a more premium player. So our portfolio is more towards the premium products. And where the other peers are operating at low-end products where the margins are very thin. So that's how, by optimizing our product portfolio, focusing on our core strength and localization rate. That is again our strength. Our current localization rate is 54%, where raw material and components we are procuring from India. And our biggest strength is our India manufacturing. We are totally aligned with Make in India drive. 95% of our products we are producing in our 2 factories. Other than this, we are doing a lot of cost optimization, which also helped us to improve our margins. Like the main products, the main components of our products like compressors, heat exchangers, clutch assemblies, all these we manufacture in-house only. So we are not dependent on any kind of import for these.
Okay, we had asked you this before, and let's wrap it up with those numbers once again. 30,000 crore revenue and 3,000 crore PAT by FY27 with mid-teens margins. That's possible, right?
That's possible.
Yeah. All right. Thanks a lot for joining in, Sanjay.
There are some key drivers, because as Sanjay ji
Thank
you. That's good to know, and we'll have many more opportunities. As you come to the listed universe. So look forward, Sanjay and Atul. Really, thank you for joining us, and good speaking with both of you here. Good luck with that IPO. So that's LG Electronics India coming through. All right, Mayuresh Joshi is with us from William O'Neill, who's with us. Mayuresh, good morning. Great to have you with us here. Appreciate it. One more global MNC here. What do you make of it? I don't know if you have given this a look for investors. Subscribe, not subscribe. What's your sense?
Morning, Prashant. No, I think the long-term investors can subscribe for this because I think the growth and potential of the consumer durable market in India is expected to grow at an exponential pace over the next few years. And therefore, I think as urban demand and semi-urban demand starts coming back slowly and steadily, amidst competition, obviously there is huge competition in this space as well. You've obviously got the likes of a Whirlpool as an example, Chroma, which probably also is opening stores as we speak through their own brands as well. You've got Lloyd's played through Havells as well. And therefore, I think the market size itself for the organized sector can grow quite substantially. From a valuation perspective, again, at a discount compared to its larger peer as the juncture. And therefore, I think from a long-term view, I think it looks like a decent subscription that can probably take place. But from an immediate short-term perspective, how numbers will play out will hold key, not just for LG, for the other places.
All right, so what about the other players? Mayuresh, you did like a couple of these banking updates that came in yesterday. Anything specific that that caught your fancy?
Morning, Mangalam. No, so HDFC Bank, I think a decent update that has probably come through among the larger names. And therefore, I think the circumspect issue for large banks was how deposits will probably grow. They have grown decently. It probably seems that the CASA compression is now largely behind us. That seems to be the case, and Q3 will probably justify that even more. And therefore, I think as festivities start coming in, the kind of growth that one really expects, and again, having a measured check in terms of their other risk-weighted assets, I think that should probably keep a check in terms of asset quality issues as well, not just for HDFC Bank, for the banking sector as a whole. So I think a few of these larger banks did surprise us. But again, I think as a space, we still believe that NBFCs, the larger ones, can actually fare better over the next few quarters.
Got that, Mayuresh. The big event is also going to get underway here in Bombay. I'm talking about the 6th edition of the Global FinTech Fest, which kicks off 3-day event. Prime Minister Modi is expected to attend the GFF day after, that is on the 9th. We'll have, of course, full reportage out of there. Our colleague Ritu is going to be conducting lots of interviews, and she's there to give us, a sense of what's happening. Ritu, morning.
Good morning, Prashant. The movers and shakers of the fintech ecosystem are converging right here under one roof for the next 3 action-packed days here at the Global FinTech Festival in the heart of Mumbai's financial capital at the Bandra Kurla complex. The event is, this is the 6th edition. It is being organized by the NPCI, the Payment Council of India, and the FinTech Convergence Council. The highlight this year, like you said, will be a key session by Prime Minister Narendra Modi, who will be sharing the stage with UK Prime Minister Keir Starmer, and that's going to be huge coming after the free trade agreement that has been signed between the two countries. And here at the GFF, the two leaders are expected to talk about the synergies between London's thriving global fintech ecosystem and India's very own digital public infrastructure. But that aside, it is going to be a star-studded event nonetheless. From Union Finance Minister Nirmala Sitharaman, RBI Governor Sanjay Malhotra, SEBI Chairperson Tuhin Kanta Pandey, DFS Nagaraju, and a whole host of others will be taking the stage here over the course of the next 3 days. The theme very aptly captures it for this time around: embedded or empowering finance for a better world that will be powered by AI. And speaking of AI, there will be a whole host of showcases here at the festival. A highlight will be one of the showcases that is being set up by the NPCI and NVIDIA to talk about some of the cutting-edge technology that is transforming finance. So watch out for some of these sessions. We will be bringing to you live, from here at the Global FinTech Festival. As you can see, it is pretty power-packed. Just to give you some statistics, there's, the scale of the event itself is incredible. 7,500 companies participating, 800 speakers, 500 investors, 400 exhibitors, and 300 sessions. 17 central bank governors from across the world will also be here, Switzerland, Singapore, Germany, and others. So it is going to be a one-of-a-kind event, and the footfall, believe it or not, more than 100,000 people are expected here in the course of the next 3 days.
Absolutely, and this is the scale will put any one of these investor conferences to shame, right? We've had a bunch of them. Ritu, by the way, who are you most excited to speak to, or any particular session?
Well, I'm going to be hosting a fireside with the Bank of Baroda CEO, but, the PayPal Global CEO, Alex Chris, will be here in conversation with Shireen later. Many, many sessions to look forward to, but of course, Prime Minister Modi on the last day is something we all want to hear.
All right.
So I think the best way to do that is to just watch everything that Ritu puts out on the channel itself, because 100,000 people descending upon, BKC is going to be quite a traffic jam out there, a traffic situation. So most definitely, keep coming to you, Ritu,
By the
via
way,
satellite.
The Mumbai police has issued directions, traffic, because it's going to be humongous, right?
Yeah, I mean,
You can go
100,000
in,
people.
but-
The last time 100,000 people congregated for anything near BKC was Navratri, and that was over 9 days. I don't think it was...
No, if you remember the GFF last year,
yeah.
I mean, it's traffic is a casualty. But anyway.
Yeah, I took that on board. I sent my son 10 minutes earlier to school today, just to make it on time. But Ritu, we're going to keep coming to you all through the day. Have a good one, and we'll catch up with you during the course of the day.
Thank you.
For the time being, we'll slip in a short break, come back. Pre-open rates we'll get, and we'll also be joined by Naveen Trivedi of Motilal Oswal Financial Services. He'll give us some perspective on the consumer sector stocks. Stay tuned.
Welcome back. You're watching us here on Open Exchange, live from the CNBC-TV18 Motilal Oswal studio. 18 minutes to go for market open, 3 minutes to go for market pre-open. And as we speak, the GIFT Nifty is up nearly 46 points. So that's a steady rise that we've seen right from pre-open, where it was at 1 point negative, then closer to around 10 points higher, and now it's nearly 46 points higher. So let's see how that goes about. But a lot of these second quarter updates that came by, in that yesterday towards the last hour of trade, we had an update coming in from Trent. And if you look at the intraday chart of Trent yesterday, it had actually seen a big decline as soon as the updates hit the screen. The biggest reason for that was the revenue growth. That came in at 17%. And this compares with, the H1 revenue growth of 19%, the first quarter revenue growth of 20%, which implies that the revenue growth, the pace of growth has been slowing down. In fact, the revenues this time around a little over 5,000 crores. The company in its analyst meet itself had said that, 25% revenue growth is sustainable. But now that has come down to 20%, not just that, 17%. So that puts the onus on the second half of this year to, go ahead and conquer that 25% growth mark for the entire year. So let's see whether, there would be increased volume offtake to offset the sort of reduction that we'll see on account of GST prices, because for Zudio, most of the products are below the 2,500 rupee mark, and the growth from newer formats, X of Zudio and Westside. The company's been speaking about grocery, ethnic wear, as well as some of their streetwear variants doing extremely well. So it'll be very important to notice trend in the second half of this year, because same time last year, the stock was at around 8,000 rupees, now down to closer to 5,000. Mayuresh Joshi is still with us. Mayuresh, your thoughts on Trent? Do you think the valuations are reasonable enough for you to look at it right now after the correction that we've seen? You believe second half will see better growth prospects than the first half?
That's the base case scenario, Mangalam. I think second half will probably bring about larger growth dynamics. And as you rightly mentioned, I think the management probably is very, very optimistic in terms of continuing its 25% growth rate. Obviously, I think how Zudio performs is going to be extremely critical for Trent's overall performance. And therefore, I think the store expansions become equally critical in terms of the overall dynamics for the company as well. From a valuation perspective, I think it's fairly valued even now. I think the markets give it the superior valuations because of the hyper growth that it probably posts compared to its competition. And therefore, the hope is that the second half will probably bring about a dynamic change as far as numbers are concerned. So we are definitely keeping this on our watch list. But what we continue owning within this space is something like a Vishal Megamart. Our belief is that the kind of numbers that can probably come through and the mix that Vishal Megamart probably has in terms of apparel, in terms of FMCG, the grocery part, the store placements, the expectations of rural discretionary spending coming back very, very strongly. Very strong updates from its peer, V-Mart Retail as well. Very, very similar business dynamics, a little bit of a difference in terms of margins and return ratios. However, I think these players can fare a tad bit better in my opinion. But yes, Trent is definitely on the list.
Okay, all right, Mayuresh, appreciate you joining in. Wishing you a good day ahead, and we look forward to having you on the show rather soon. Well, from the fundamentals, let's move to the technicals. Sudarshan Sukhani joins us on the show, and Medesh Thakkar as well. Good morning, gentlemen, and good to see you all in. Sudarshan, you go first. The Nifty has seen a good bounce. Do you think we're good for more? Today, we have the weekly expiry, which will have an added element of spice to it. Your view on the Nifty first.
Well, good morning. Well, yesterday we said let's go long, and we were very lucky because we got a trend day. I think that trend is likely to continue. It's been there. We are in an uptrend for the last week or so. Now, how much of a rally we will see today is a question mark because every day we don't have to go 200 points higher. But the key point remains buy on every day, buy on every small consolidation. As you said, it's nifty expiry that strange things can happen, but don't get swayed by intraday moves. Have a slightly wide, longer view. You want to be long in the nifty. Keep a tight stop at 24,900 for short term traders, but with that stop loss, stay long.
All right, stay long with the stop loss. Mitesh, your thoughts?
I think on the Nifty, I mentioned that getting past 25,000 could be tough, but the bank Nifty could propel the Nifty higher. And that is exactly how it played out. The bank Nifty, I think the first target which I was looking for was around 56,300. So we might hit that. In case you manage to get past that, I'm looking at even 57,000, 56,900, 57,000 zone. So I'll keep a close watch there. But the idea is that the structure for both the indices is positive. So intraday declines should be used to buy into, and if people already have long, just maintain their long positions.
Right. And individual stocks, what would you back?
I have a buy on Angel One with a stop at 22.39 for targets of 23.20. IIFL is a buy with a stop at 4. It's a buy on a mild decline, around 466, 465 half. Buy with a stop at 458 for targets of 482. A buy on LIC India with a stop at 894 for targets of 935, and Oil India is a buy. Keep a stop at 414 or just below it, and 430 should be the trading target.
Okay, all right. And Sudarshan, what about you?
Well, it's also an all buy list. Paytm is a buy with a stop under 1200. Coforge is a buying opportunity, one of the few IT stocks that are doing very well with a stop under 1630. Persistent Systems is a buy with a stop under 5,080. And finally, SRF is a buying opportunity with a stop under 2,900.
All right, so those are a couple of these chart calls that we have for the morning. Both, Sudarshan and Mitesh fairly bullish on the frontline index, expecting, for people to hold the longs with a stop loss after a good day that we saw yesterday. Let's shift focus to the consumer space now. We did speak about Trent. We spoke about a whole host of updates that have come in. HUL saying that the business would be flat. Good performance coming in from Nykaa. DMart slightly shy of expectations. And a 30% growth coming in from Marico with margin compression as well. We are awaiting numbers coming in from Titan, Godrej Consumer, as well as Dabur. So let's see how that pans out. We do have with us Motilal Oswal's Naveen Trivedi, who is the Senior VP, Research Analyst, Consumer, FMCG and Institutional Equities. Thanks a lot, Naveen, for joining in. Always a pleasure speaking with you. Of all the updates that have come in so far, what has really been a standout or stand down for you? And have you made any tweaks to your picks because of those updates?
Yeah, sure. So, Manglam, if you look at Q2 point of view, we have been seeing that GST transition, seasonality, and some of the trade disruption is kind of impacting the primary numbers. I don't think so. The Q2 will really kind of reflect the underlying kind of a performance this quarter, because some of the winter kind of a placing will be kind of shifted from September to October. And some of the personal care companies started kind of passing the GST benefits also prior to the 22nd kind of a threshold. So a little bit kind of impact will be there in the Q2. And we all are hopeful that the recovery which we all are kind of expecting will start from Q3 onwards. So from update side point of view, my sense here is that in the staples, certainly Marico's, because of the copra inflation which we had kind of seen on the pricing side, certainly the revenue growth on a higher side, but we need to be watchful if the EBITDA growth side, if we can start reflecting on a double-digit sort of thing in the coming quarters. So we'll be watchful on that. On the lever side, I think the September month where the transition impact was there, and then the winter replacement was not there this month, a little bit kind of postponed to October. So this will kind of have some impact into Q2. But having said that, in our understanding, Q2 will be kind of a non-event from the understanding of the underlying demand point of view. The true reflection start from festive to how this Q3 kind of plays out to reflect the demand side.
All right. But, you spoke about the third quarter being the barometer of actual impact on consumption, and the second quarter was a washout. Hindustan Unilever has called out in its update that the demand recovery will happen only from November. October will continue to face some disruptions as well. It's among your top picks, and October is the month which had both Dussehra as well as Diwali. It's typically high consumption for a company like Hindustan Unilever. Thereafter, we'll have the ice cream business demerger, etc. as well. So do you think it's going to be weaker than expected for the third quarter for something like a lever as well? And will that reflect on all the other companies as well, where October will still face disruption?
So Mangalam, I think in their press release, they had mentioned that a little bit inventory impact will still be there in the October. So from the consumer offtake point of view, I don't think so this will have any change. Maybe primary side, depending on the category where the price specs may see some delays in the grammage additions and may take some temporary kind of different kind of a strategy. But by and large, I'm with you that maybe October may not give you the full primary kind of a benefit, but consumer side, if anything, will pick up to the festive side. I think this will kind of adjust in the inventory side. So maybe November, December from the primary placement point of view will be a true reflection. But from the consumer side, if there is any pickup in the demand because of the rate reduction and other benefits which had passed on in the last couple of months, then I think this will be a true reflection of the kind of demand side.
All right. Hi, Naveen. Good morning. Good to see you. I can see that you have an underperformed rating on Devyani as well as Sapphire. You're not too impressed at current reckoning. What if there is this buzz? What if both of them come together? If there is a merger, do you think it will be positive, or do you think it doesn't change things that much?
I don't think I will be able to comment on any futuristic sort of if that happens, or will this be positive or negative.
Yeah.
But I think the QSR itself, if you look at this, the pack is still looking out from the demand recovery point of view. I don't think the quarter two still is a reflection of what we all are kind of expecting from the recovery point of view. Plus, on top of that, the Navratri has also kind of preponed in quarter two. So a little bit kind of a last 10 days impact will also be there in the September. So it will also have an impact in the quarter two performance. Quarter three, we are hopeful. At least October looks good to us. Festive and some footfalls will also kind of pick up, given the lot of footfall is kind of a taper down in September. So we expect that will also kind of inch up and will improve the out-of-home consumption. And parallelly, if other macro side of drivers, if they are kind of improving the demand, then QSR can also see some improvement in the quarter three onwards.
Right. Okay, but if they come together, will there be some synergy benefits? Just taking it in case they do. We're not saying whether or not it will happen, but do you see some benefit?
There are possibilities are there, because you may have supply side cost efficiencies, and since you have master franchisee and managing the entire asset in India, certainly you may have a better play in terms of the marketing side. So decision making will be more under control. So all these things can play out favorable if that happens, but still it's hypothetical.
All right. And I'm very curious about some of your top picks. It includes the likes of P.N. Gadgil as well as Restaurant Brands Asia. One would imagine that if you had to play the jewelry space, you'd play it with something like a Kalyan or maybe Titan, if not valuations very attractive there. And then you have, in the QSR space as well, Westlife, Jubilant Foodworks are there. You don't like Devyani and Sapphire. But Restaurant Brands Asia, Burger King is something that you like. So I'm curious about those calls, P.N. Gadgil and RBA.
Sure. So Mangalam, if you look at P.N. Gadgil, since the IPO time, they've been kind of very active on the store expansion rollouts. So they were primarily in Maharashtra. Now, if you look at, they also started venturing out in MP and also UP. So the store expansion momentum is favorable. If they sustain the underlying triple SSG, which last quarter has kind of slightly on a lower side because of the preponement of Gudi Padwa and all. But this quarter looks to us that despite the base which we had kind of a custom duty impact, if they can maintain the triple SSG on a higher side, along with the kind of store rollouts which we kind of are seeing in the other markets also, I would say that they will become more and more kind of diversified from the market point of view. They're still kind of rolling out and a very the expansions plans are quite attractive. If they sustain those momentum, I think within the jewelry, so we've been kind of very bullish on the jewelry, and Kalyan also we kind of have a positive rating only. It's just like in the growth path where rollouts looks on a smoother way for Cargill, we have been kind of bullish on that.
All right, take that point. Thank you so much for joining in and giving us your views on the entire consumer space. Look forward to having more conversations with you as the result season progresses as well. It's 9:10 and the perfect time to go back to Mitesh and get his 9:10 call. Mitesh.
I'll go with a buy on Angel One for targets of around 23.20.
Sudarshan?
Coforge, buy Coforge with a stop under 1630.
All right, from one Sudarshan to another, let's go across to Sudarshan Kumar, our team members. Sud, you're tracking Interglobe Aviation this morning.
So Investec has come out with a note on Indigo and it has maintained sell call with a target of rupees 4,050 per share. That implies a downside of almost 30% from current levels of around rupees 5,700 per share that stock is trading. And it says company is set for another weak quarter and may report profit before loss of rupees 1,000 crore in Q2. And that's mainly because of slower capacity growth that company has been seeing in the last few quarters. And also H1 EPS estimate is at rupees 28 per share and believes that to deliver FY26 estimate, company has to deliver EPS of rupees 193 per share in H2, and that it believes, the Investec believes that it's very unlikely. And now, despite 20% YY EPS decline that company had seen in Q1, it had seen minor decline. It had seen a minor cut in the consensus. But now, post Q2, Investec says that it will see a sharper cut. And now, with index inclusion catalyst is now behind, it believes that it expects stock to realign with earnings fundamentals, and that's the reason it's negative on the stock.
Okay, all right. Thanks a lot for that, Sud. Well, let's go across to Hormuz. He's here to talk about LTI Mindtree. Hormuz?
A major deal win indeed for LTI Mindtree, Nigel, and it is the deal that they announced is a multi-year agreement with a leading global media and entertainment company. Of course, the deal that they have signed, the company, they have not named that, but they've said that it represents their largest strategic deal till date. Now, Reuters is reporting, citing sources, that this deal is likely to be valued at $580 million, which is much higher than the deal that they had announced in May, which was around $450 million with the US-based agri major. So another large deal will coming in from LTI Mindtree. The stock had snapped a 3-day losing streak yesterday, and courtesy of this deal win, the stock is all set to open higher today as well.
Hormuz, thanks very much for that. So that's LTI Mindtree. We'll actually just check up on some of these prices, right? The pre-open has come to a close. And let's look at how stocks are opening up and where they've left off at the end of the pre-open. So Reliance Industries, subscription data, Bharti up on your screen. LTI Mindtree, as Hormuz was just pointing out, 2% higher. Second quarter business updates flowing in. Bank of India, Metropolis, both 1.33% higher respectively. There's some news flow. Brigade Enterprises, Astral, 2%, 0.5% kind of changes to begin the session. More stocks in focus. There's Aditya Birla Lifestyle, which is up 1%. Eternal is up 0.12%. And Optimus Infracon is up about 1/3% or so as well. So, I mean, it's a thin news day as well. And of course, I mean, in terms of specific movement, there isn't very much. There isn't anything very large in that sense, which is coming through. I think we'll be able to sort of come up with market opening, the first rates in just about 30-40 seconds. We'll do that, and then we'll, of course, drill down to individual names. There are always, of course, some of these, sharp moves, which we will track for you. So those are indices coming up as well. The mid-cap index. Actually, yesterday, the Nifty was up strongly. Volumes were on the side of stocks which were higher in the broader market, but numerically, market breadth was negative by the time we ended. And that's largely because the small cap index did not participate at all. What do we have? First rates, which will start to come in. 25,085 or so is where the Nifty is now at, is absolutely flat, running into that 25,120 resistance zone. 25,100 on the screen. Nifty Bank is up about 0.1% higher. The sensex is up 0.1. The small cap index is up a third, and I think the mid cap index is up about 0.25% as well. So that is the picture as we start right out of the gates at 9:15 this morning. Nifty heat map will come up on your screen. It'll give you a quick sense of where we are starting and how many up and down. So overwhelmingly, it's a green-looking screen. Coal India, ONGC on one side, Trent and Max Health. Trent is something Mangalam has been highlighting, which is starting weaker this morning. It's firmer now, so Nifty's got 40 points on it. The Sensex has got about 150 points on it to begin the session. We are exactly at that 61.8% retracement of the fall, which is 25,120 on the Nifty. So you're there. Stocks, guys.
Well, Trent, that's the one actually that's taking a knock this morning because of the downgrade that's coming from Aquarius and because the growth rates basically have slowed down. And the stock, as we already know, it's not cheap at all. So that, in fact, is down closer to around 2.5%. What's doing well? McLeod Russell, I don't know, that stock is up closer on 10%. Big up move is what we're seeing on that name. Another couple of names that have done well. Atlanta, I remember they won a big order. And this week itself, the stock is up. Last 1 month, small company, but they have won a large order, so that's why that stock continues to move from strength to strength. Inox Green is up 2.5%, so good move is what we're seeing on that name. And a stock that woke up late in trade yesterday was Lur Travenues Tech. Well, that continues its good form. That's spiking away as we speak. So good start to some of these stocks today. A few more notable names. J&K India, that stock is up close to around 10%. I think I've seen an order win. So that one, in fact, continues to move from strength to strength. We have Shaily Engineering, another stock that has done very, very well on a larger time frame, though it had corrected recently from the top. That continues to drive home the advantage of that stock as well. Up and about. But Mangalam, clearly Trent taking a bit of a knock today.
Trent taking a bit of a knock today. It will be very interesting to see if at lower levels there is some purchase on optimism of the second half doing a lot better than what the first half would be doing. And remember, the second half they'll also go into a lot more favourable base. The last 5 years, the revenues have been compounding at over 35%. In the last few quarters, that number's come down to around mid-20s, if not early 20s. So if they go into a high demand and low base period, could we see some sort of traction coming by on Trent or not? Something that the street will be watching out for. But LTI-Mindtree, the deal with the global media company working in their favor, that stock's higher. The IT stocks were higher yesterday. LTI-Mindtree has another reason to cheer. Fortis Healthcare, after the big move that we saw yesterday, is coming in for a wee bit of profit taking. So we'll watch out for that one. Sugar stocks are lower as well. So typically it's a stock, it's a sector that moves in a pack. So Balrampur Chini at the low point in this morning trade itself. And AB Fashion and Retail also seeing some wee bit of profit taking. Delivery continues its march forward from a near 6% rally yesterday, is up around 1.5% right of the gates. Astral does well as well, 1.5%. Something's up with McLeod Russell for sure. Over the last few days, it's been doing extremely well. In fact, the last 1 week or so, that stock has rallied almost 40%. So big gains on McLeod Russell. Stylem is the other one, which is also seeing some traction. And alongside that, we have Raymond Realty, which opened lower and has found some purchase currently at the high point.
Just one word, McLeod Russell in the AGM, they had given a bit of a hint on debt restructuring. So I think the street is buying into that. That's one stock that's up. And Shaily, stock that normally we don't talk about and the volumes are very, very low. There was a large trade that took place. So that explains why there's a big volume spike on that name. And the stock is up close to on 7%. So just wanted to highlight both those two.
Okay, that's on your screen now, and 2,300 on Shaily at this point in time. Maybe just take a quick look at, so it's 2:1, but it's very early and things will change and this will move around. But two stocks up for one down. That's broadly the picture at this stage. Maybe a few other names. By the way, Bank of India is the biggest volume-led gainer right now on the NSE. The Jain Resources, it's a recent listing, it's about 3-4 days old in the market, 6% higher, and it's got large volumes, third largest volumes to begin the session. Rate gain is up about 3%. Again, decent sized volumes coming through. It's coming off extremely bombed out levels. Inox Green was up 5% yesterday. It's done phenomenally well lately. Another 3% coming through. Premier Explosives was up 6% yesterday. That's starting again with about a 1% pop. And this listing yesterday pays DigiTick 2%, and it's got volumes to begin the session at this point in time. So, you know, that market breadth, it's just opening, so we'll give it some more time, but it's converging. KIOCL, right, which Hormuz was talking about yesterday, this morning with the price action, etc., is starting about 6% lower. It had that big move yesterday, very small amount of free float. Last 2 days, it's gone up like a rocket. It's coming down a bit. BSE ended about 5.5% higher yesterday. It's down about 1.25% or so. And it's just some reversals. Fortis was a big mover, 7%, is down about 2%, and so on and so forth.
The market's come off a little bit, you know, from what we saw at the open itself now. And what's leading it lower are the ones that took it higher yesterday, both the IT pack and the bank. So the Nifty bank is down by about 65 points right now, just above that 56,000 mark. It's led lower by Axis Bank, that's at the low point. And alongside that, we have HDFC Bank as well, which did well yesterday and now coming in for a wee bit of profit booking if you must. And then we had TCS and a lot of these IT stocks as well, which are mildly off highs. Nothing really which is worrisome, but just, you know, mildly off highs, and that's reflecting in the way the markets are. Nifty slightly above the flat line.
Yeah, absolutely. 10 points now, 25.88 on the index. Vineet Samre is with us. He's head of equities at DSP Mutual Fund. Vineet, good morning. Great to have you with us here. Appreciate your time. You know, I want to start with IT, and I think in your portfolios, Coforge is a big bet in that sense. It's, of course, I mean, last quarter, it's been for many quarters now, it's the highest growth mid-cap IT company, if you want to call it mid-cap, out there. But there was that deal, and that didn't enthuse investors too much. That's the last quarter. Expectations are out for this quarter as well. So just talk us through your bet here with Coforge specifically, if you can. And of course, I mean, IT services broadly.
Yeah, so I think it's a big debate. As of now, we are all seeing what is happening at the macro as far as the IT is concerned. The whole debate around AI, the impact of AI on the IT sector, I think the noise levels are going to remain very high. And I would maintain that in the past as well, we had seen the similar kind of noise level happening when we went through this cycle of digitization, cloudification, and the challenges were again raised back then. That how the Indian IT companies basically are going to sort of survive in that kind of an environment, because we are mostly service oriented. As I see the scenario, I think the IT companies have emerged, they have adopted, and I believe their ability to adopt and maybe have their share of pie in the service part of the business as and when it starts improving is what we are looking at. Now, the most important change which we believe this time around is the fact that the mid-cap IT companies have become much more agile, and their ability to maybe have a higher share of some of the good deals is also seen today. In that environment, I think Coforge, which is one of our bets, as you have mentioned, that company has outgrown most of the IT sector peers, including the large and mid-cap in a way. And the kind of execution focus the company has, actually that gives us a lot of confidence about their ability to not only sustain in this volatile environment, but I think continue the growth going forward. So I think what we are trying to sort of focus on is the companies where the visibility of growth remains strong, and maybe valuations particularly not very attractive, but still I think we will go by the visibility of strong growth which the company provides.
Right, visibility of strong growth and decent valuations. What about auto ancillaries? Because you have nearly 10% of your portfolio exposure in auto ancillaries, and now here visibility of growth vis-a-vis exports, etc., is slightly challenged because of the uncertainty that we are seeing in the tariff world. So how do you play that, and what are your thoughts here?
So Mangalam, you're right. In fact, auto ancs across a few of our portfolios, we have quite a significant weight. And the whole idea is actually to play the discretionary consumption theme indirectly. I believe Auto Anks, and I would reiterate, in your channel, I have mentioned earlier as well that we like the Auto Ank overall as a category because their ability to sort of keep diversifying into different client base, keep becoming, let's say, more engineering focused company rather than, Auto Anks, commoditized kind of a business. And also their ability to, transition from one technology to other. I think that provides us a very strong core competency which these companies have. And more importantly, I think they have created a global benchmark in terms of being cost effective as well. Now, my point is that these tariff-related challenges maybe will hurt some of the companies to some extent in the short term, but these companies will keep gaining their or keep using their competitiveness to penetrate these markets eventually. Or whenever these tariff-related issues subside, I think these companies are going to only gain. So I believe that there's a huge opportunity which is there in the domestic market. The GST benefits will percolate down to the sector, the auto OEs, and from that perspective, the auto anks should also emerge as beneficiaries of this momentum.
All right, hi Vineet, good to see you, Vin. So you like the discretionary consumption theme? Select auto anks as well as what you're positive on. Did we get that correct?
Yeah, Nigel.
All right. And what about, I think, from the BFSI space, insurance is something that was standing out. You were, I think, having a positive view a few months or so ago. If you could tell us, what is the pecking order out there? I recall NBFCs and insurance we had spoken about. Do you continue to like those themes?
Yeah, I think incrementally NBFCs, even banks for that matter, are emerging to be, let's say, coming out of their problem. I see this quarter to be the peak in terms of their issues regarding the NIM pressures, or asset quality anyways has been okay. The growth is sort of coming back. The pre-quarterly releases, we are seeing, the growth momentum is also sort of becoming better. So from that perspective, I would say that the whole banking sector, and as overall economic growth starts recovering back, I would imagine the banking sector to see the benefits of that. And like you mentioned, Nigel, we are more positive on the NBFCs purely because of their outperformance in terms of the growth and the niche which these companies have established, which we like in a way. Insurance has been a steady performer. I would say have gone through some of the regulatory challenges. Now most of the regulatory noises are behind them, and maybe the sector sees better growth. The benefit of GST in terms of the price to the consumer is also going to sort of see them, gaining. And incrementally, we have seen that on the margins front, the VNB margin front, so the insurance businesses have sort of shown a recovery from the last year. So I think that's where we stand, and which is where the insurance also becomes part of our portfolio.
Increasingly, BFSI also includes, the stock market or the capital market theme, where you have exchanges, you have brokers, you have wealth management companies. What is your thesis here?
Yeah, so we have exposure out there. So I think this is more to do with the steady growth of the financialization which is taking place in India. And I believe this trend should sustain now. We can go wrong on this because these are, after all, cycles, and we have seen in the past they coming down as well. But I think some of the companies, they have evolved over a period of time. And, if we actually take a block of 5 years and see, I think the trend is only going to remain positive for the capital markets overall. So I think from that perspective, we want to participate in that theme. Maybe we have short-term cycles which we have to deal with, but I think those will also be the period to consolidate and maybe go higher on our exposures out there.
So what specific themes are you betting on in the capital market space? Or rather, what according to you is the best way to play it? Is it via the exchanges? Is it via brokers? Or is it via the asset managers?
See, actually, wealth management platforms, companies are something which we like. The digital, broking companies is also what we own. So I think we have positive views. But as I mentioned, exchanges also is what we own. I think we have to be selective. We can't. It's not a broad-based basket approach, but selecting the companies which we like in terms of their execution.
Got that. By the way, what we began with, right? But that was IT, Vineet. AI's impact on IT services. But have you and your team looked at ways to, play that here in India somehow? The huge amount of spends on AI itself. Any way to do it?
Unfortunately, I think the Indian companies particularly are not going to participate in this first wave where this whole hardware and implementation is happening, a lot of spends are taking place. But once the service component of that grows, I think which is when the Indian companies should gain is the belief. But direct AI plays, I think, very difficult to see them within the Indian basket as such.
Yeah, there are there's small ones, but anything people latch, but they've been latched on to. Prices have run up, etc. Quite sharply. What else? I think Bharat auto comps is a big area for you, right? Broadly.
Well, not really. We have one or two companies, but not direct plays there. These could be a combination of other business. Yeah.
Where do you stand in these new age companies, right? We saw a couple of listings in the recent past as well. There was Urban Company, and then obviously the kind of, returns that something like an Eternal has generated. Then you have Swiggy. Even if you want to put something like a Paytm and all of that, Ola Electric in that basket, how do you look at the underlying opportunity and the current valuations or the way they are valued right now?
So somehow, Mangalam, we have been unfortunately not participated in them and hence not gained from what has happened out there. Maybe some resistance comes because of that framework around profitability, framework around the return on capital employed, framework around the strong moats which the businesses have. Now, what we observe is that maybe some of the companies have created a good strong moat and not really able to understand what disruption can happen to these businesses. Maybe as it happens, we come to know. But more importantly, what we were not able to sort of clearly understand was their path to profitability in some cases, not all. And hence, we left some of those opportunities. Now, we hear that some of the companies have started talking about reduction of losses. Maybe there should the path to profitability should also emerge. From that perspective, we would not call it never say no kind of a thought process, but we will be open to look at those. And whenever we find it gets back to our framework, we will definitely have a look at these companies.
Any of the IPOs that you like? There was WeWork, which is shutting today. Tata Capital. There's LG Electronics that opens today. Any particular space that caught your fancy?
Yeah, overall, we have been selective, and I think we have looked at the Tata Cap is something which we have looked at. But IPOs in general, we look at selectively. We participate in the ones which broadly gets into our framework.
All right, Vineet. Thank you so much for joining in and giving us your views on the market, the whole host of stocks, sectors that you like. Wish you a very happy festive season. Hopefully, we speak once before Diwali as well. If not, then to you and your team, a very happy Diwali as well. Let's see how the street reacts to Diwali sales for names like Trent, because the stock opened lower from lower levels. There has been some purchase. Now it's curtailed its losses to just about 2%. Remember, from its 52-week high, the stock is down about 43 odd percent already. Same time last year when the stock was over 8,000 rupees as a piece. It was largely on the back of them foraying into lab-grown diamonds as well. Whether demand comes by for those products or not is the big question, because the last 2 quarters, the revenue hasn't been keeping pace with its own historic growth rate itself. The second quarter update, 17% revenue growth, which is lower than the first quarter, which was 20%. The first half is 19%. The last 5 years CAGR has been over 35%. And the management themselves, in an analyst meet, said that they can sustain 25% on a revenue CAGR. So the street is disappointed on account of those factors. The revenue is not keeping up with the company's own history and the management's promise too. What we'll have to watch out for from here on in the reported numbers would be the same-store sales growth in Zudio. In the second half, how will business come by, largely because of the GST rate reduction? Will there be enough volume offtake to offset that price reduction and growth from their newer formats, which include the likes of Utsah, which is the ethnic wear business, Burnt Toast, which is the streetwear business, and alongside that you have Star Bazaar as well, which is the grocery business. On the back of all of this, we've had some brokerage notes coming in too. Aquarius has downgraded the stock today, but Morgan Stanley, they maintain their overweight rating. Their target price is just shy of that 6,000 rupees, 5,982. And they too were expecting around 25% growth this time around, and the company has reported 17%. Though a lot of people believe that maybe the second half of this year they can go and catch up with the deficit that is there in the first half, and for the year they can do over 25% as well. Whether they do or not is the jury's still out on that, but the stock mildly off lows, still not back to its all-time highs.
All right, Mangalam, thanks for that. Well, let's hop across to Ekta. She's here to tell us about Metropolis. That's buzzing in trade. A good operational update. Ekta?
Well, yes, Metropolis is buzzing in trade today because they have come out with their Q2 FY26 update. And what they have indicated is that the company reported a 23% year-on-year consolidated revenue growth. It was led by a strong performance in the preventive health check segment, which is True Health, and the wellness offerings. The growth came despite a lower incidence of seasonal illnesses like dengue and malaria during the quarter as well. Core Diagnostics, which is one of their acquisitions, has improved to high single-digit margins from a break-even in Q4 of FY25. Scientific Pathology and DAPIC Dehradun continue to outperform companies' average margins. The EBITDA margins, according to them, on a consolidated basis have remained strong. True Health Wellness, which is preventive health and specialty segment, grew 25% and 36% respectively. So strong growth coming in there. B2C was up 16%, B2B was up 34%. The company remains debt-free and net cash surplus of around 55 odd crores.
All right, Ekta, thanks a lot for that. Let's continue on the consumption theme itself. We do have an interesting discussion lined up for you right now on Bazaar. We have Manoj Verma, who's the COO of Pikaji Foods International. Alongside him is Mayank Shah, who's the Vice President at Parle Products as well. Companies that are, as staple consumption as it gets. On the one hand, you have India's most popular biscuit brand. The other, you have, an organized bhujia player too. We've got to discuss three important things. One, the GST transition, because GST 2.0 on consumption, they had to be good. But how has the transition been? The second part, festive season expectations. So has it been as good as what they were expecting it to be? And the third part, raw material environment, which continues to, while benign, remain fairly volatile as well. Mayank, Manoj, thank you so much for joining in. Let's start with... Manoj, you had said that you expected about 3 to 5% incremental volumes on account of the GST 2.0. How has the transition been? How have you managed to, send out all the lower priced or higher grammage products into the stores? Were you able to pass it earlier smoothly and monitor that passage as well?
Good morning and thank you for inviting for this show. I think I'll take this question in two parts, right? So let's look at part one, which was the transition. So I think ever since this GST reduction was announced, there was a little bit hiccup in the purchasing. So the retail environment was hesitant of that. I mean, let's wait for new MRPs to come in or the prices coming down. I think that was a little bit a tough time, and wherein the STRs, the stock weight on the shelves went low, and it was a challenge. Lots of companies to fight with those interim challenges passed on lots of schemes as well, so as to keep up the sales going on. But I think in a long term, so part two is that going forward, yes, it will bring and it has brought a lot of positive momentum. And now in most of the shelves, what you see is now the reduced price which is there. The modern trade environment, which is more organized, there even the old MRP stock or the erstwhile stocks what they had, they are selling it at per new reduced MRP with their signages on this stuff. So I see a very positive momentum and good impact going forward as well.
All right, so the last 10 days of September were worrisome for you. That will reflect in your second quarter as well. We'll talk about that in just a bit. But let's put that question forth to Mayank as well. Mayank, Parle, most of the products sold between 5 and 10 rupee SKUs, if not the lower prices as well. If I remember correctly, over 2/3 or, nearly 75% plus comes in from these lower priced variants. How did you manage to pass on the prices out there? Because you can't make a 5 rupee biscuit 4.88. And obviously at the same time, within a short span, you can't increase the weightage as well. So was that tough for you, and how did you manage the passage?
Yeah. So, Mangalam, there are, two stages of this entire transition or passing back of lower MRP to consumers. The first one is unlike, snacks or namkeens where you can pack a little extra in the pack immediately. It's very different for biscuits. Biscuits, you have, typically inventories of wrapper and stuff like that for about 1.5, 2 months. That's the kind of lead time that you have. So it's a two-phase transition. In the first phase, what happens is you immediately reduce the MRP. So a 5 rupee becomes 4 rupee 45 paisa, and so on and so forth. 10 rupee becomes 8 rupee 90 paisa. You have the wrapper which is printed with a 10 rupee or a 5 rupee, and you strike it off, and you inject a lower MRP so as to pass on the benefit of GST.
But how do people give you 45 paisa when they have to buy a biscuit? Now, how do the 55 paisa change come back to them?
Yeah, so that's where UPI helps. What we have seen is that the adoption of UPI is significantly high today, and it's increasing as a result of this particular measure. That's one. Secondly, typically when you are going out and buying a biscuit, and a large part of buying in rural India and suburban India happens like that. Even a good part in urban India, where probably individual is going to the shop, or a small kid is going to the shop to buy a pack of biscuit. Along with that, he carries back a candy or something like that. If there is no change, if there is change, they'll provide it, or mostly it is UPI through which they typically buy it. But that is, just timing. That's the transient phase or the first phase that I was talking about. The second phase is where you will see companies adding that much weight in smaller packs and taking back the MRPs to 5 rupees or 10 rupees, such that the MRP per kg would be reduced to give the benefit of GST to consumers.
And have there been any checks from regulators, people from the government, or has it been smooth right now? Because a lot of people are saying that, because the government took away the anti-profiteering law, companies have run amok. Has there been any surprise checks, etc.?
Yeah, so the government is, CBIC is collecting packs from the market on whether companies have passed back the benefit or not. And I think, a large part of companies have been compliant on it. They have passed back the benefit. We are seeing in market the revised MRP packs or the revised weight packs, as I shared in the case of, namkeens and snacks. They have increased it's easier for them because, in a pouch, you can add probably 1.5, 2 gram if it is around 20 grams or so. And, as I shared with biscuits, it might take a bit of time. In next 15, 20 days, you will start seeing smaller packs with higher weight, so as that the MRP per kg is reduced by the quantum of GST benefit. That would be the way biscuit companies would be passing back benefit to the consumers. This would be specifically for the lower MRP packs. For higher MRPs, the MRPs have been reduced.
Okay, all right. Got that, Mayankji. Let's go back to Mr. Verma then. Mr. Verma, what about the festive season? Q3, what are the expectations? You have this transition now that's taken place. Festive season as well as there's Diwali, then there's Christmas as well. On a like-to-like basis, how much better can Q3 be if you compare it on a year-on-year basis? What are your expectations?
So the festive season is looking really bright, and we're very positive on that stuff. That's the kind of response what we see not only with Bikaji, with other players playing in this space. Quarter, if we look at, I think, we should look at both, in terms of gifting, or sweets, which is more relevant to this festive season, and the rest of the business. So if we talk about our gifting, sweets, I think this will be a wonderful growth. So a good number to be delivered in this quarter.
That's the third quarter. What about the second quarter that just went by? Because HUL said it was absolutely flat. Was it the case for you as well? Because the last few days were disrupted?
Of course, 10 days were disrupted, but still we'll deliver. We'll be delivering a good growth even in Q2 as well.
Can you define good? Is it high single digit? Is it low double digit? It's volumes wise?
It certainly will be a double digit growth.
Okay, double digit value growth, and volume would be high single or double?
So close to that. So high single or I'll say a double digit kind of.
Got that. And Mayank, for the biscuit industry, how did that pan out? And more so because, the last 10 days of a quarter is where a lot of the channel pushing also happens. So you would have lost a lot of sales, I suppose.
Yeah, so it was not just about, transition post 22nd. Even prior to that, I think there was restricted buying that was happening from retailers and distributors. That was in anticipation of, better prices. And it was more with biscuits compared to snacks. Snacks, the reduction in GST was from 12% to 5%. So net, there was about just 5-6% to be passed back. However, when you talk about biscuits, it was from 18% to 5%. So there was a significant amount of, reduction that was going to happen there. As a result of it, there was reduced buying that was happening from 5th, 6th of September onwards till about 22nd. Post 22nd, we saw a little bit of bump, but that was largely into primary, in primary sales. Secondaries, started picking up over a period of time, let's say from 27, 28. But that's, I would term that as a teething trouble. And going forward, we are expecting, better sales. So yeah, there might be a little bit of impact on second quarter, but third quarter is something that we are expecting to be, at least lower double-digit growth.
All right, Mr. Shah, what about your market share? Could you tell us how has that moved in the recent months? What is it currently?
Yeah, currently, if we talk about Parle's market share, we are at about 29%. And this is in terms of value. In terms of volumes, we are about 33%.
So, and how would that compare with, say, a few months ago? Have you gained market share according to your estimates?
Yeah, we've gained about 75 basis points in last 1 year.
All right, 75 basis points in the last 1 year. Wonder whether that was from the larger players or whether that was from regional players. We'll talk about that in time to come. But just finally, before we let you go, both Manoj and Mayank, a view on the commodities prices right now. They were fairly volatile. Now they're expected to be a bit range bound as we move in the second half of the year. The price hikes also in the base. So Manoj, let's start with you on the margin front, the raw material price front. How is that?
So raw material prices are pretty much stable, and this is what we've foresee. So therefore, on the bottom line, this won't be impacting. And what we have done, and I think most of the companies, what they have rightfully done, the benefits what they got on this GST reduction, I think that's going to the consumer, which eventually will increase consumption. So good for overall consumption standpoint.
All right, and Mayank, you on edible oil prices, they had seen a decline from the highs, but they've also seen an increase from the lows.
Yeah, so I think for us, they would be largely stable. That should not be an issue. There are two commodities which, one should be watchful of. One is wheat. Because of the increase in MSP, you would see, some increase in wheat flour prices. And secondly, cocoa. So I think these are two commodities that, one should be mindful of. We expecting, them to go up. And given both of them, especially wheat is a key input, I think we would be a little wary of, inflation, especially into cookies category. If you're talking about cocoa happens to be a major ingredient, chocolate cookies, bourbons, and those kind of things. That's where I think we would have to be watchful about what's happening on the cocoa front.
All right.
Those are two commodities that we are keeping a close tab on.
All right. Thank you so much for joining in and giving us an update into how transition for GST for the consumer companies have been, at the same time telling us a little about the festive season, but more importantly, whetting all our collective appetites out here. Day starts with a Parle-G biscuit, perhaps ends with a bhujia as well. So the AM and PM has been taken care of by both the M's here, Manoj and Mayank. Thank you for joining in. With that, we'll take a short break. On the other side, when you consume too much of all of this, you may need some of the services that IKS Health speaks about. So let's talk about IKS Health. Nitya Balasubramanian joins in to give her business outlook.
Welcome back. Well, the markets actually are holding with solid gains. Now, remember that 61.8% retracement of the recent fall was at around 25,120. So we're comfortably trading about those levels. Now, the next level you're looking at is around 25,200 on the upside. It appears, going by the recent move that you've seen, at least in the near term, till that 24,850 odd level is held out, you'll have to say this market has turned around from a sell on rise to a bit of a buy on dips. That's the way things have panned out. Even today, you saw a bit of a downtick that got bought into. Similar was the case yesterday as well. But as promised, let's go across to the management of IKS. We have Nithya Balasubramanian, the Group CFO, who joins us on the show. Hi, Nithya. Always good to have you on the show. Thanks a lot for joining in. We'll be coming to you in just a bit. For the time being, just highlighting the top 3 points we're going to be looking at. What do Trump's moves to cut healthcare expenditure spell for healthcare in the United States? And in turn, on IKS's business, what's IKS exposure to the United States at present? And how is the WWMG MSO arrangement panning out right now? Well, Nithya, appreciate you joining in. We want to get a sense in terms of business. So let's focus on a couple of the points that we highlighted first. What's the exposure to the United States, if you could help us out with the number? And what do Trump's moves to cut healthcare expenditure spell for the healthcare sector in the United States, first of all, and for your business as well?
Good morning, and thank you for having me on your show. So US is the most important market for us. If you look at our revenue exposure, that's about 99% is from the US. We do have some small presence in Australia and Canada, but US remains our largest market, and that's likely to remain so in the near future as well. Because we firmly believe that there is significant growth runway. So actually it's blinders on, we're focused on executing in the US. Now to your second question around the administration's recent moves around controlling healthcare costs. I think we all appreciate that US is one of the largest spenders on healthcare. They're spending up to $5 trillion on healthcare, which is almost about 20% of their GDP. So clearly unsustainable. And therefore, they've been attempting to do several things to be able to bend the cost curve. And one of the recent things that we saw in the big, beautiful bill was an effort to significantly reduce Medicaid spending. Medicaid spending, again, you will appreciate that this is insurance coverage provided for the underprivileged sections in the society. Now, what is actually happening, therefore, is as this reimbursement comes down in Medicaid, the rural hospitals and the community hospitals in some of the smaller towns, they are seeing lower and lower reimbursement. Again, narrowly speaking and looking at only IKS, I can tell you that our customers' exposure is rather insignificant to Medicaid. Their exposure is more to commercial payers as well as Medicare. So we don't see an immediate impact on our customer base. However, that being said, the larger pressure on US healthcare, if anything, is playing out as a tailwind for us, because working with IKS, where we are able to significantly reduce their spend base, where we're able to improve the productivity and therefore realize even higher revenues on the same cost base, all of these are ways for them to shore up their P&L in light of the pressures that they're seeing in terms of reimbursements.
Okay.
So we are seeing a lot more inclination from our customers to look at our solutions because of the pressures that they're seeing from the Medicaid cuts.
Nithya, hi, morning. Good to have you here. So Medicaid, so there are two, Medicaid and Medicare. Medicare is the much larger portion, right? Medicare is a smaller bit.
So Medicare is for the older age group, 60 plus, and Medicaid, as I meant, is for underprivileged sections.
Yeah. On Medicare, also, do you expect, since it's a larger bit and the efforts are to reduce healthcare spending, since, as you said, is unsustainable, will that have any pressure?
So there's been a lot of rhetoric coming out of the government about looking at Medicare spends as well, tightening the spends, making it more efficient. And this is, again, not something new. If you go back and look at, in fact, the last several decades, 2 decades, in fact, the reimbursement growth, spend growth in Medicare has actually continuously come down. And in the same context, in the same 2 decades, the administrative burden on these physician groups or hospitals has actually mushroomed several fold. So I think the pressure has always existed. It's nothing new. And I think when I look at IKS and the platform solution that we are offering our customers, we're actually part of the solution and trying to help support them by reducing these administrative spends so that they're actually able to address the fact that even in Medicare, over the last several years, the reimbursement growth has continued to come down.
Got that. And it's slightly different in the case of healthcare, right? I mean, the point is, in most other industries, they're trying to, I mean, I guess in the US as well, all large pharma companies, global pharma companies have committed to investing billions of dollars in the US, right? And the deal with Pfizer recently, perhaps a case in point. So maybe they'll be able to sort of work around all of this eventually. Now, just in terms of people, Nithya, you have your workforce here in India, largely in India, right?
So we have teams in the US as well, a commercial organization, our implementation team, our customer success team, they're all based out of the US. And we do have a large production workforce, some part of our clinically trained team, those sit out of India. Our tech team is again split between the US and India. We've got a center of excellence for AI in India, and the larger tech team, support team sits out of India.
Okay, and in terms of that angle, right, workforce, there is no implication as of yet. I mean, we don't know this Hire Act, etc. This H-1B, this proposed hire thing, it'll go through, not go through. But anything you see out there as an implication down the line?
So Hires Act, as we know, I think it did not see enough traction. And the H-1B visa related issue is not really relevant for us because our business model is not to send people from India to the US. Whatever work we do in the US, we actually hire people from the US. And the rest of the workforce, like I mentioned, is based out of India. So anything related to H-1B is thankfully insignificant or immaterial for us.
Right. How's the partnership that you had with WWMG or Western Washington Miracle Group panning out right now? How many synergies have been realized?
We're very, very excited about the relationship we have with Western Washington. I think what we're trying to achieve here is establish a benchmark in terms of how much transformation we're able to achieve when the platform is implemented at its fullest potential. So we have started on the implementation. Implementation takes anywhere between 1 to 2 quarters. And going forward, we are very, very positive about realizing these synergies. And I think the biggest difference with when we work with a regular customer versus when we are working with Western Washington in the MSO construct is that now I actually have a fully incentivized set of physicians who are completely aligned in terms of their adoption. They want to adopt it. They want to drive the productivity benefits that the platform can bring to the table and therefore realize the benefits. The physicians are also shareholders of the MSO. So clearly we benefit right alongside the doctors and the shareholders also benefiting. And for us, of course, while we're selling the platform and realizing a profit pool that I'm creating in IKS, I'm also creating an additional profit pool as an equity holder in the MSO. So we're tracking to our plans and very, very excited about the transformation we can achieve here.
Could you quantify some of those plans? What are your milestones here, incremental revenue targets, or sort of, scalability here? If you could give us some sense.
We have not disclosed those, but I think qualitatively I can tell you that the capital that we have invested in the MSO is targeted towards expanding the physician group itself, in particular the primary care physicians. So there are in the near term plans to hire several primary care physicians, which will obviously have an immediate impact on the revenue. And the second important vector is as we implement our platform in general across customers, what we have seen is that customers tend to spend 15% of their revenues on these administrative tasks, and we are able to deliver it at 8 to 10%. So there is an immediate saving that accrues to the P&L once the platform kicks in. And over a period of time, these physician groups also tend to realize an additional 5% uptick in the revenue just from the productivity benefits that they realize from the platform. So this is what we have seen across several customers where we have been implementing our solutions. And we would expect something similar or better when we're looking at the implementation with the MSO.
All right, Nithya, final question before we let you go. We don't want to know about the past quarter's numbers or even the next quarter. We want to know what is the ambition in terms of growth. Should it be mid-teens growth with margins holding at current levels, which is around the 30% mark?
So we have said that we would want to continuously outpace the market growth. If you look at the outsourcing market growth for the services that we provide in the US, that market is expanding at 12%. So we would want to grow several notches higher than that because we firmly believe that the value that we bring to the table should help us continuously gain market share. And I'm not giving you a FY27 guidance, not an FY26 guidance. We're talking about the next 5-7 years. In fact. And in terms of margins, we think what's sustainable for us in the long run is the early to mid 30s range. We're already touching that range, and we will remain in that range.
Lots of some numbers there, and we'll more later perhaps. Nitya, thank you very much for joining us. Good speaking with you. Appreciate your time here on CNBC TV18. There are two listings. One is listed at a sharp discount. The other is listed at par with the issue was sold at. So Glottis lists at a 84 rupee per share price. Issue price was 129 rupees. And Fabtech is the other one, which is listed basically at 192, 191 was where the issue was sold at. So, and now, of course, it's moved up. Fabtech is at 403 on your screen now. So that's up 9%.
Right.
And this is the first kind of rates which is starting to come through.
Just one more word, Prashant. Besides the listing, just want to make a word on the refiners. I recall that we had discussed in Q1 itself that Q1 could be soft for refiners because global refining capacity itself is down and the refining margins had moved up. Q1 got hit because of the inventory levels. Now it seems the street is bracing for a better Q2 because that inventory, headwind will not be there in all probability. So we'll have to see what kind of numbers come out. But in the last few days, if you're looking at a CPCL or MRPL, the street is building in that these numbers would be good. We'll have to see whether or not they're as good as expected. But clearly, just pull up the last few days and pull up today's volumes as well. A lot of refining capacity in Russia as well as Ukraine has got hit. Capacity has moved, lower. While we have the margins, the refining margins that have moved up. So that's why in the last 1 month, it's a tricky sector, but MRPL has moved up close to around 20%. I recall after the Q1 numbers, the stock got hit, but they had a production shutdown as well. And CPCL as well, that is Chennai Petro, that as well had got hit post its numbers. That's the Q1 numbers. But now in the last few days, again, we're seeing that one as well has spiked up. 20%, both those two stocks are up just in the last 1 month or so. So keep an eye out on that. Street is expecting a better showing in Q2. We'll have to see whether or not delivery is in line. Take a short break, come back. We'll continue our focus on stocks on the other side. Stay with us.
Welcome back. The market's now roaring up around 113 points, closer to 25,200 on the frontline index, and it's been led by the Nifty Bank, which had a slightly shaky start, and from there on it's consistently built. And we've also seen some traction in the auto stock. So the auto index comes up for you. Auto index is at the high point of trade, led by a lot of these entry level and some of the premium vehicles as well. So you have Maruti Suzuki, which has moved to the high point of trade. Some traction in a couple of these two-wheelers as well, Bajaj Auto and Hero MotoCorp. And at the premium level, we have Eicher Motors, which too has seen a spike and currently moved to the higher end of today's trading range so far. So after a 110-point up move today, after a good move yesterday and on the previous trading session as well, do we see some signs of short covering beginning or not? Chandan Taparia, who's the head of derivatives and technicals, along with wealth management at Motilal Oswal Financial Services, joining in now. Chandan, weekly options expiry today. A lot of people are betting on, the 25,200, 25,250 mark to play a little tront as far as congestion is concerned. But the number of shorts that are there in the system and the positive move that we're seeing in the market, do you see some sense of short covering coming by in the very near future?
Good morning, Mangalam. Thanks for having me. So market has been making high tops, high bottom from last 4 trading sessions, and index rallied well by more than 600 points. The good part is that supports are gradually shifting higher and selective sector have really outperformed, especially when we talk about the bank Nifty. The good part is that Nifty has taken multiple support near 24,442 to 24,600 zone in 4 to 5 times in last 3 to 4 months. So it seems that now consolidation is getting over and a small follow-up could lead the next leg of rally in the market. But as of now, till it holds about 25,000, we'll look for some bullish stance and expecting Nifty to head towards 25,450 to 25,600. Purely talking about day point of view, we are trading higher than its weekly volume weighted average, and we have seen sustained put writing, and now the call unwinding is clearly visible at 25,200. So I believe a bounce towards 25,250 to 25,300 cannot be ruled out. So one can play the bullish stance for day as well as for weekly point of view. And talking about Bank Nifty index, that clearly outperformed, rallied well by more than 2,200 points in last 4 to 5 days, surpassed the previous hurdle of 56,000, holding well above key moving averages. And I believe our performance could continue to take it on higher zone. So till it holds above 56,000, we are expecting banking index to head towards 57,000 as well.
Got that. So those are, index level calls. What about individual stocks? What's on your list?
Yeah, thanks, Prasant. So first is buy on Unominda, one of the strongest counter. Technically, the stock has given a consolidation breakout of last 25 trading session. On the weekly chart, it is also forming a bullish pole and flag pattern, which has the positive setup as of now. I believe this price formation has potential to rally the stock by more than 4 to 8%. The good part is consolidation breakout is now at the verge of fresh leg of rally, and we have seen build-up of long position with sustained buying interest. A small follow-up could lead to the next leg of rally, so one can buy with support of 1315, and stock has potential to rally towards 1400 kind of level. Second trading idea, that is buy on Eternal. We have positive stance in most of the new age business, and Eternal is one of the strongest counter, which is all set to start the next leg of rally. I believe the recent setup, which took support at 320, could open the fresh leg of upside, so one can buy Eternal with support of 330 for an upside target was 360. And one more trading idea, that is buy on Paytm. One of the strong setup recently took support near 1100 marks, negated its lower top, lower bottom on the weekly chart, making higher top, higher bottom on the daily chart. We have seen put writing with long built up. Delayed volume is quite encouraging, so recommending to buy Paytm with support of 1225. And this new age business has potential to really towards 1300 marks.
Okay, take that point, all those trading ideas and the index. Thank you so much, Chandan, for that. The auto stocks have been doing well, so let's get into an auto conversation. M&M has launched 2 new SUVs, Mahindra Bolero and Bolero Neo, which get refreshed with updated features. Rachna Dhanrajani caught up with Nalinikant Golagunta, who's the CEO Auto at M&M, and began by asking him about the new Boleros and the expectations from the festive season. Listen.
Both these products are much loved in the segments we serve in, whether it's the rural or the semi-urban. And what we have really done is we have tried to preserve the goodness of what the product, which is a core SUV body-on-frame vehicle, yet listen to customer feedback on some of the creature comforts they wanted, infotainment and tech as well. So what you see is a refinement on what is already a very, very attractive value proposition. And now we've made it a lot more attractive with not just the features we put out there, but also with the pricing.
Right. We're at a very interesting time of the year. We just got done with Navratri, and looking ahead, there's Dhanteras, Diwali coming in. How is your Navratri?
No, it's looking great. On October 1st, we talked about the fact that our dealers themselves were seeing significant walk-ins as well. So retail dealer reported retails are up 60% on SUVs. And so clearly a strong traction. Of course, some of it is portfolio driven, but a lot of it is also because of GST 2.0 coming in as well. So we are looking forward to a strong festive season.
Right. While GST was a massive reason to cheer with people looking to buy new cars, but there's also currency fluctuation that we're seeing, and in the global markets where raw material prices are going up. So though you were quick to pass on the GST benefits, will there be hikes passed on too in the coming year?
So it's hard to speculate how the commodity costs will play out. At this point in time, our intent was to ensure that the government, when they put out the policy, what was the aim behind it, and we made sure that we're passing on those benefits to customers. And as the environment changes or macro changes, we can go back and take a look at it. But at this point in time, we are excited to pass on the GST benefits.
Right. With a multi-segment, so many product launches, what exactly are we trying to do to sort of curtail competition and close down the competitive gap?
Yeah, so we are always focused on what we can provide as choices to customers. We have a portfolio which straddles all the way from a very rural market all the way to a highly sophisticated product like an XEV9e to that extent. So we believe in providing choices to customer in powertrain, in terms of form factor as well, and the rest of it is for the customers to decide.
Right. But given how the demand for EV has been, what has been your take on the rise of electric vehicles, and what other pockets of opportunity do you see in the coming future in terms of tech, in terms of hybrid?
Yeah, so EV is clearly an area we're focusing on as a company. It's an end state we believe the industry will always go towards. And from that perspective, even if you see the August-September numbers, it's very clear that there continues to be momentum in that space. In fact, if you look at Vahan registrations for September, it crossed 14,000 for the first time on EVs. So we believe the product itself has gained mainstream acceptance. And with our launch coming up in November, end of November, we believe that we'll be adding to our portfolio to drive that mainstreaming of EVs.
Right. But is CNG something that you see as a strategic launch to get into the market, to tap into like more pockets that you see of growth?
Yeah, so different powertrains and fuel options are something we always consider at any point in time. But we want to make sure that whatever we put out as a product also matches what customers have as expectations on a vehicle. So at this point in time, CNG may not meet up to our power on tap requirement. We have powerful engines that we put out there to that extent. But as technology evolves, of course, it's one of the considerations that we'll have.
Right. Also, do tell us what, since Navratri was quite pleasant, what is your expectation for Diwali and for the rest of the year that's left?
So we are hoping that the footfalls and the inquiries that we have been seeing so far, beginning of the festival, will continue and will convert into more bookings and retail ultimately. And so we're quite optimistic for the overall festive season.
Right. In terms of segment, lastly, I want to understand with you just how we see with GST 2.0, we see other companies becoming more cheaper for entry-level cars. Do you see some demand consolidation happening in certain segments?
Yeah, very early to say if there's going to be a dominant trend, but there's a few trends we're seeing. We're seeing with the entry-level SUVs becoming more accessible, the folks who are jumping straight to SUVs are not necessarily buying a hatchback, so we see some of that. We're also seeing customers buying a higher variant because the budget remains the same for them. So they are looking at it and saying that, can I buy a higher end variant with the same budget to the extent? So we're seeing some of that as well. Some of them actually trading up in terms of models within the SUV portfolio, within our portfolio as well. So we are seeing all these different trends. We'll have to see which of these dominates, but it's early to say.